Well, a lot of great reasons to live in the state of Florida. Obviously, no state income tax, people moving here frequently. But one of the challenges that creates for us and our realtor partners are multiple offer situations. Inventory still continues to be low, which is a good thing, keeps property values up. But what are some of the challenges that we hear most or that stand out to you when we put a pre-qual letter together for a buyer's agent and they submit in a multiple offer situation on how sellers and their agents are deciding upon which offer to take?
Down payment amount is a big one.
Which is crazy to think about. People are thinking down payment amount matters, but why the scrutiny on that?
It is a piece that is included on the offer letters, but it's not something that we are bound to. When an offer is made and a down payment amount is listed, we're not required to follow that exact amount for financing.
So I think one of the things that people, I've heard a lot, and I'm sure you have as well, is like, well, your client's only putting 5% down, this one's putting 20% down. Tell the people why that doesn't matter.
Well, I could have a 20% down payment conventional loan and somebody with a 49.7 back-end debt-to-income ratio. I could have another individual doing a 5%, 10% on a FHA loan with a 22% back-end ratio. So really what it comes down to, the down payment amount does not impact the seller. More skin in the game is not really of consequence when it comes to this. So the down payment amount to me is, I've always kind of looked at this and I'm like, why does this even make a difference? Because it doesn't benefit the seller one way or the other. At the end of the day,
it doesn't tell you anything
and
about
it doesn't
the strength.
mean that borrower with the 20% down payment is any stronger than the person putting 5% down. So
I can understand sometimes people want to ask us about credit, which we're not necessarily allowed to talk about the details of, but credit certainly matters. Debt to income ratio maybe more than anything matters, but the amount of down payment does not. It's more about that loan amount they're financing and what the subsequent payment does to their front end and back end housing and total expense ratio.
And it's something that I think folks don't know either is that the person putting 20% down versus the one putting 5% down is going to get a slightly higher rate of interest as well.
That's a good point. Yeah, 20% or 80% loan to value is the highest loan to value you can have without having the benefit of the mortgage insurance, which covers the investor there. And so you're going to get a little bit of a worse rate there than you would if you had 85% loan to value with a small piece of mortgage insurance. Again, another reason to take a big picture look at the overall options that are available to each buyer. How about in terms of discrimination towards certain types of financing, whether that be your client submitted an FHA offer. We had a conventional offer that we decided to go to because it was stronger.
The sellers think a lot of times that any of the government financing, FHA, USDA, or VA, that it's going to be harder for the buyer to obtain. And especially in the market we're in right now, that's just not true.
Or they're not as well qualified, therefore they're going with an FHA loan. I mean, there are a lot of benefits to FHA financing. What are the biggest benefits that stand out to you as FHA over conventional?
Well, we see a lot of customers right now that could go either conventionally or FHA, and in some cases, FHA comes out cheaper.
That's right.
They had a huge reduction to their mortgage insurance factor in March of 2023, and since then it's made it a much more competitive loan for the buyer to save some money.
And you've talked an awful lot about how that overall mortgage insurance reduction has helped out. How does mortgage insurance differ on conventional loans than what it does on FHA?
So FHA, really, it's an acronym for the Federal Housing Administration. It's a glorified mortgage insurance company that's subsidized by the federal government. Okay, now you have PMI, private mortgage insurance, which is a separate company. It's a third-party company that actually goes out and lays the insurance over your actual mortgage when going through a conventional loan. But that private mortgage insurance is also tiered, and there's a couple things that are going to matter here: your debt-to-income ratio, credit score, things of that nature. As you start to get maybe in that 680 to 700 credit score range, it could very well be much more beneficial to go with an FHA loan because it's got that set amount, whether you have a 600 credit score or an 800 credit score, your private mortgage insurance is going to be the exact same. So what we're seeing in today's day and age, because of that drop, which was a big advantage to all borrowers, much less our FHA borrowers, sometimes it makes a lot more sense to go with the FHA loan with the subsidized insurance from the federal government versus the private mortgage insurance.
So the assumption of a seller or a listing agent that this client is going with a government loan, so they're obviously not as well qualified, is a complete myth.
Complete myth, absolutely.
So again, I think the thing that frustrates me the most is that people on the other end of an offer being submitted sometimes make assumptions based upon the type of financing that clients are utilizing. Really, when in actuality, all that should matter is the lender that's submitting that pre-qual letter, or in our case, a pre-approval letter. Talk about what the difference between a pre-qual letter and a pre-approval is.
A pre-qual letter is more of a generality, kind of a target purchase price. We know some things, we've already reviewed credit and income, but a pre-approval letter is stronger. A pre-approval letter means that a specific property has been reviewed. We've been able to run through automated underwriting, maintain an approval there, and overall, we just have a lot more information about that customer and that home at that purchase price.
Yeah, so the pre-approval letter specific to that client, to that home itself, and we issue those specific to the price that is being offered on that home. But going back to kind of what we're dealing with in this market right now, with rates being higher, with home values being higher, there are some real restrictions, and not restrictions and guidelines, but restrictions in terms of the de facto numbers as it relates to what the overall debt ratios are. Why does FHA have some advantage? Like in a case where we are submitting an offer, why should a seller, maybe have a conversation with us about why we chose to go FHA as opposed to assuming that they're not as qualified borrowers?
Well, we're always up for that conversation, first and foremost. Here's the reality. Homes are more expensive today. It just is what it is, right? We've had interest rates go up. Homes are continuing to appreciate. Homes are more expensive. It's just what it comes down to. FHA, because of its government-backed insurance, allows some slightly higher debt-to-income ratios that you're not afforded with your typical conventional loan, right? Or conforming loan. You're just not allowed to do it. It just is what it is. So FHA provides that little flexibility that borrower might need to get from a home that they would accept versus a home that they would love. And sometimes that difference could be $50,000, $60,000, $70,000 in purchase price, can make all the world in the difference of what that borrower or that buyer is really looking for. And FHA could be the perfect tool to get that buyer there.
Yeah, so, and I think a lot of people don't understand that a lot of the guidelines, whether it's conventional or in this case FHA, are kind of gray, and they're open to interpretation.
Correct.
And the interpretation of the underwriter of the overall lender is something that can differentiate whether or not you can make a deal work that might not otherwise work.
There are certainly some flexibilities when it comes to underwriting, utilizing VA, FHA. There's a lot of things that we can do that you otherwise would not be allowed to do within your typical
And we are, again,
finance.
a direct lender, so that means we are approved with Fannie Mae, Freddie Mac, and Ginnie Mae. We deliver directly to those agencies. Our underwriting manager has conversations frequently on questions about guidelines and how we can find a way to make deals work. I think that takes me back to the most important part of the conversation as it relates to sellers taking offers, listing agents reviewing those offers, is you're only as good as the pre-qual letter or pre-approval letter that you have from that lender. That letter means nothing if it's not backed by a lender that's trusted. That's why here at Chris Doering Mortgage, we've built our reputation for almost 17 years on being a local business with local accountability. We work with the same title companies, appraisers. We work with the same agents in this market over and over again. We can help anybody throughout the North Central Florida area, as well as throughout the state of Florida as well. Let us put our experience and expertise to work for you and show you how we can make a difference in your client's ability to qualify and at higher purchase prices as well. Now, I think there's a lot of people out there that confuse the idea of a lender is a lender or rates are a rate. Well, I think there's so much more to that. And honestly, I take a little bit of an exception when somebody calls me and says, hey, what are your rates today? There are different lenders, from brokers to correspondent lenders to direct lenders. We are a direct lender, meaning we're approved with Fannie Mae, Freddie Mac, Ginnie Mae. We deliver directly to those agencies. We underwrite strictly to the guidelines of the agencies. There's no investor overlays or things that we have to worry about. So it allows us to be more aggressive with the way that we approach a file. It's a one-stop shop where we handle the file from start to finish with our in-house underwriting staff. We actually do retain the servicing rights, so your loan's not being transferred around and making payments to different people every single month. It truly is A to Z mortgage loan experience. But for you guys, having originated in this platform that we're in, what's one of the big advantages that you've enjoyed opposed to other places that you've been in the past?
Consistency. If I'm being perfect, consistency is huge. Our ability to establish a panel of local appraisers, I think, has proven to be really big for us.
Everybody has to order through an appraisal management company. There is an appraisal independence requirement that everybody's forced to operate under. But one of the things we hear a lot from agents, sellers agents, is, oh man, they sent in an appraiser from out of market. That'll never happen with us.
Yeah.
The panel of appraisers are folks that have been specifically drawn from the area that we're servicing on the subject property, and that makes a huge difference.
Well, they're domiciled within that area, right? So they know that market. I don't necessarily want an appraiser coming from Orlando, right, coming up into Gainesville or our surrounding areas to appraise a home, because they might not have the same level of understanding that some of our local appraisers are. And truth be told, all of our local appraisers here have been doing this a long time. You know, there's decades and decades of experience with almost every one of our appraisers. And I think that helps. That helps having somebody being knowledgeable of what this market is. Gainesville's unique, let's be honest. It's a college transient town. We have huge job push here. We have a huge technological sector now that's coming in. There's not a lot of homes, not as many homes as we would like maybe on the market, right? So there's a little bit of a demand versus supply component that these appraisers understand, that maybe somebody coming out of Jacksonville or Orlando or Tampa or whatever might not understand.
That's not saying anything negative about those appraisers, but it's better when somebody is handling those local markets. Now, we're statewide from Pensacola all the way down to Key West. We can handle any financing in the state of Florida. In each instance, the appraisal management company we utilize has a panel of appraisers that has been, in most situations, suggested by those local agents as being the most excellent in their field there. So you can bet that even if you're outside of Gainesville doing a mortgage loan with us, you're going to have an appraiser that's qualified to give an opinion of value on that property. How about you, Kristen? Anything that specifically has stood out to you about one of the things that we do better than maybe other lenders do that you've experienced?
Well, speed is huge. Having control of the process at every level allows us to move along quickly. So when it's needed, we're going to push that file as quickly as possible.
I think it's an important point too for multiple offer situations is we write pre-qual letters for 15 days. In some instances, we've had to come in and take over files for other lenders that haven't been able to complete it, and we get those done in 8 days. That's the fastest you're legally allowed from disclosure to time of closing. And we actually really relish the opportunity to show the speed of execution that we offer. Again, it really comes down to the lender platform itself, those originators, the staff handling your file. Would love to have the opportunity to work with you and certainly put that pre-qual letter, that pre-approval letter out there that's going to help you get the most attention from a seller and from a listing agent when they're reviewing. If you have any questions about anything that we've touched on today or anything else for that matter, please give us a call at 352-244-0840. Or if there's something you'd like to address in future episodes of Debunked with Doering Mortgage, you can reach out to us via email at askchris@mygatormortgage.com. Again, the one thing I want to leave you with today, that pre-qual letter, that pre-approval letter is only as good as the lender that's issued it. Please give us a chance to have the opportunity to take a look at your financial situation to see what we can do to bring you the credibility of the offer that you need.